Welcome back to another episode of the Anatomy of the Trade. Today we're going to discuss two of my trades. One is a complete trade, swing trade, ROKU, and then one is an unfolding trade in Spotify, and I think I've shown this multiple times. So let's just jump into that. All right. Well, here is a ROKU trade. This was a swing trade. So the idea was just to take preferably the majority of the move, and the move has started somewhere here in this area. So I was, think the entry was okay, but maybe a little bit late. Could have done this a little bit earlier. And then I definitely want to discuss the exit. So with that, Franz, welcome back. What's your first impression for this trade?
Hi, Ramon. Well, we've got a very nice cause that's been built since, I'm assuming we're looking at September of 2019 is basically where the buying climax occurred. And then we go through, obviously, phase C there. We have a nice sign of strength with, the backup there and the last point of supply and point of support, excuse me, and then we break out. The breakout is convincing because if we look at the, the level of buying that pushes us up through that downsloping resistance line, we definitely see that there's interest by buyers and good demand. So that's a very positive sign. It's interesting that the substructure of both after the sign of strength and after the or during the backing up action has very clearly defined Wyckoff phase characteristics to it. So pretty easy to read, not always when you're going through it, but looking backwards, you can definitely see where where supply came in, was absorbed, and then where the breakout occurs. So there's a kind of a stepping stone substructure of reaccumulation, if you want to call it that, and it looks like your entry was right after the breakout of that second kind of reaccumulation zone there, and on a little bit of a pullback. And as soon as we get confirmation that that is done, that's your signal, I take it. So really good volume signature, obvious demand, expecting a good, a good rally from this point, especially with the cause that's been built. So what do you think?
Yeah, I mean, first of all, an okay trade, and I'm just gonna criticize myself here, over and over. Well, first of all, there was an idea of the campaign that came, in this area right here. So that particular entry was missed. I think that the mistake to me is always not about missing the trade, because you're gonna miss trades for sure, and you still should be working on that in your process. So if you're missing a trade, you should be asking yourself a question: why am I missing a trade? Like, it was a good point of entry for the campaign trade. There is a big causality, as Franz has mentioned. So area of the last point of support as a trading range, you clearly see, all of the phases here. Last point of support again, here is your point of entry. So that question should be answered. There is no really kind of like, we shouldn't be disregarding that. Having said this, if you missed a trade and you're going to miss trades, I think the biggest thing is just to consider going into the trade again with an idea of, okay, I missed it. How do I get back into that mental state where I could still mentally commit to this trade? And there are quite a few opportunities here, like in the testing period before the resistance has been hit. So that was mistake number one. And that is not related to the swing trade. It just relates, to how you trade in this whole thing. Then I think the second mistake is not opening the position a little bit earlier. So these two bars, they have the opportunity to developed into something better and develop into a potential reversal where the subsequent reactions are going to be higher lows. So you could definitely, most definitely buy those. Now, those two bars do have a little bit of the supply signature built in them. So you are expecting naturally that there's going to be some kind of reaction. And you're obviously looking for a much flatter reaction. Now, from the perspective of this, so second mistake. So on the perspective of where the actual swing trade was entered, I think this is okay because you want to enter on a high probability at the high probability spot. And what do we see here? We see a sign of strength. We see a big backing up action, and that backing up action has a minor sign of strength and then another sign of strength and another backing up action here. So it seems that whatever supply comes in, and again, a lot of the supply here is built in those volume spikes. Every volume spike for us has an element of the demand and of the supply, and both are increasing on those. So you have to see what comes next, what kind of reaction we're going to have. So by those standards, by the time we come into this position, we know that supply is basically this. Look at this volume spike. This supply is so much less than what we've seen before. So that tells us that whatever vertically we were absorbing on the way up through those up movements where demand expands a lot and supply is present and it is expanding as well, demand was capable of absorbing, but yet required some kind of stopping action. And that's why this second trading range actually unfolded, because there was some supply. And that's also very logical because look at where we are. I mean, like, this is the area where supply has come before. Look at this bar, look at this bar, look at this bar, look at this increase of the supply. So naturally, you're gonna pause here, but through this pause we see the bullish bias. Now let's go to the trade itself. So if the entry was okay, could have been a little bit earlier, then just going through this trading range, I thought that was great. There was no kind of like hesitation to hold in. We went through the earnings, which was not a tricky spot, but always the spot where you are a little bit cautious, where you're a little bit anxious, and look at the reaction, right? So we did have a reaction that increased supply signature, but relative to the previous volume signatures, it's not that big. Plus, look at how this trend line is working nicely and confirming the uptrend at the level of the support. We also need to notice a couple of things here on the other side. So overbought condition usually brings us to some kind of trading range. Overbought condition usually brings us to some kind of trading range. So keep this in mind for a second. I thought also the medium or the mean line was very important. Look at how many times it worked as a stopping action or support. So we're seeing how this line is extremely important. And there was a point in the movement of the price right here that I was analoging to this area right here. You kind of could see how the price in the first case goes through, has a climactic bar, and then creates a reaction. So here, the same thing. The price goes up through the medium, creates a climactic bar, and then starts the reaction. So one of my mistakes with this trade was to closing out this position right here. And you might be asking, well, then why are you showing us this? Well, because I had an emotional capacity to come back into the trade literally almost on the same day. I've just recognized the mistake that, and the mistake was that the level of supply that was coming in at this point was somewhat less than the level of the supply that was coming in before. So I started thinking that the reaction is probably not going to be as significant. Plus, the higher we go, the less supply we have, just generally in the uptrend. I mean, obviously, when the uptrend changes and we have changes of behavior, that's a different thing. So we're going to have more supply. But here, as we go through the uptrend and we have high objectives, there is no reason for us to think that we might have the substantial increase of the supply unless earnings related, something like that. So I basically kind of re-entered the position almost on the same day. And then I think emotionally that compromises me to a certain degree, even though I'm somewhat proud how I was strong emotionally and came back into this position. Um,
Mm-hmm.
it's very hard to do that. And I've been training myself for years and years. So the mistake that I made here I've corrected here at this spot. So that was very interesting. And then as the price comes to the resistance, so those three spots where we have the overbought condition, um, and I'm seeing some kind of volume spike. I'm thinking that's it. I'm done. I think I was kind of like emotionally exhausted with this trade, and I'm just exiting out. So there is a continuation here based on the momentum. So we could have probably thought that with this type of the momentum that we have on the last leg, even if we have some kind of reaction, there might be some continuation. So it was warranted to wait a little bit more and time it on the diminished demand characteristics, like right here in the overbought condition. So that would be a much more perfect exit. Now, ROKU actually already somewhere here. This is not an updated chart. So it could have been a definitely much better trade in terms of the exit for sure. All right, well, Franz, let's go through the anatomy of through the post analysis.
Okay. And just a couple of observations. I really like the way you're describing how supply is obvious in all of those volume spikes, but how it's being absorbed vertically. So, that's a great observation. I thought when you were talking about missing trades, I was thinking about, well, how do you miss trades? Well, first of all, you don't have it on your watch list. Secondly, maybe you've already got, maybe you're fully invested, you don't have room for it in your portfolio. And, third, maybe you're just otherwise distracted. So, there are all sorts of things that can cause that to happen. Life kind of happens. I was going to ask you about where you placed your initials, because I think people might like to know where you placed your initial stop loss, and then whether using a kind of a mechanic, because I know that you're so advanced that you're using, you're just reading the chart on your exit. But whether, some of us that are, maybe quite not as far along, who would use a more mechanical exit system, using, trailing stops, what that might look like.
Mm-hmm. Yeah, interesting question. So the easiest way is just, to study the uh, what we call in the Wyckoff trading course significant bars. Right? So significant bars are the ones that are going to be big. They're going to be the bars that are breakout bars. Sometimes you can combine them together. So for instance, like this whole area right here, this one, this one, this one, this one. So, and you have to have specific, system as to how you trade them. I'm not going to go into the details of this, but basically, kind of like those stepping stone uh, trailing stop losses. So my exit would be somewhere here, which, as you could see, optimally does not make sense because, especially I'm trading options, so I'm not really having a hard stop loss per se, like in my on my broker's platform. My stop loss is the premium of the options, but obviously mentally, I'm thinking if I'm entering right here, my stop loss is going to be here below this bar, and then you just kind of like go. Now with options, you can't really exit on the change of behavior on the reaction because your premium collapses really quickly, especially if you're using, more of the shorter term options. So you really have to think about the spots where you exit, and those are important. Those are going to be overbought conditions, which this was. So now that I'm looking at this, using the stop loss, where would I get out? So I'm losing time here. That's number one. And I might lose even a little bit in price, because this bar was a little bit significant. But yeah, really good question, Franz. Okay, well, let's go through the post analysis. So bias.
And then one last observation, and that's how you really have been working on your emotional readiness to recognize the recognize a possible opportunity that it's still there. So
Yeah,
don't give up on it.
Yeah, I actually I was really pleased with that reentry, because there was this kind of like mental struggle, right? Because you see on the chart one thing, and you get into the clarity of what the chart is showing to you at some moment, but you already closed the position. So what do? You have a couple of options. You could definitely, and then for myself, I'm going to be so self-critical. So the option there is just not to do anything, and then be extremely self-critical, and that just probably not the best. I mean, unless you could use that self-criticism to propel you more. But when you do that, you're still gonna come to the proper second solution, which is basically I criticize myself for getting out of the position in position that it's supposed to go up after that. So what do? If it's still gonna go up, get back in and collect, what's left out there, and that will allow you at least mentally to be in a good place. Now, the profits here on the way up were not as great, let's say, as the profits in this part of the trade. So that also could be, talked about. But, I think, again, it just coming back emotionally is very, very hard. So I was extremely satisfied with that. All right,
Yep.
so bias is up.
Yep.
Okay, time in, I would say yes.
Yeah. Yep.
Character, yes. Point of entry, yes. Stop loss. Well, I don't know. What do you think, Franz? What's the stop loss? I mean, obviously, I'm exiting just based on the price action itself.
I mean, you showed where your stop loss, where your initial stop loss was, and it didn't get hit. So I'd say yes on stop loss.
Okay.
I mean, you had in mind where the trade was going to fail. So.
Okay.
Yeah.
All right. So add-ons. I'm gonna consider that second re-entry as add-ons.
Okay.
So I'm gonna say yes, and exit. Probably. Yeah, should have waited maybe a little bit here. But again, I mean, if you think about the optimal exit strategy, then probably you're okay here. It's not like, okay, I'm going to put 50-50. How about this? 50-50, and then on the add-ons, just because I got out, so 50-50. So this would be easier to calculate, so we have 1, 2, 3, 4, 5, 6. Okay, let me just quickly do that. It's 86%. 86%. So in comments, our earlier entry. What else, Franz?
Well, would you even be, if this was a campaign trade, would you be using options, or would you be using like just the underlying stock?
Yeah, with campaign trades, it's always cash. It's not
Yeah, that's what I was
leveraged.
saying.
So yeah.
Yeah. So, other comments. When you got, I mean, we were having this more of a trading range stair stepping move, and then I don't know. I thought your entry was really good actually, because that last trading range wasn't nearly as extended as the previous ones. You didn't have to go through as much. Watch your premium kind of get beaten around, and so other than your initial observation, and I think your comments would be definitely give yourself a pat on the back for your emotional awareness.
Maybe just a little bit more into the climactic action. This was not climactic. This was just deterioration of the demand with some elements of the supply coming in. So maybe just wait for true buy-in climax. Okay. All right. Well, let's finish up with this and let's go to another one. So the next trade is something that I've shown multiple times in our classes and maybe even here. So this is unfolding trade. This trade is not done. This is Spotify. It's still on. But there are quite a lot of lessons here because in a lot of cases, when people think about investments, campaign trading, sometimes they don't have this emotional capacity to go through prolonged consolidations because this is what's going to happen. You're establishing a campaign trade, it's going to last maybe more than a year even. And you really, really have to have the mental landscape to be able to trade those type of trades and to stay in them. So from the analysis point of view, everything is kind of very clear here. You could go through the labeling and see it right away. COVID reaction produced this phase C. It's outperforming the market right away. You can see this on the relative strength. And then a very good dynamic move up into the sign of strength where demand is present. So you just start accumulating your position. And by the way, these are the places that I'm showing, but there were so many entries in these places. And then you go into such a big run. So look at this 110, 120 into it hit 300 on this bar right here. So it's times 2.5 at least, or close to 3. So you know that with this type of the momentum and specifically with this volume signature, you kind of could see like a previous stopping action on this type of high demand plus supply. So you are expecting a consolidation. And I think that the beauty of this trade is not even in the entries. The beauty is actually in the way how this position has been scaled out at the highest moment there on the rally before the trading range unfolded. And why am I kind of pointing this out? I mean, you might ask me, well, isn't the price went higher? That's not the point. The point here is that you have to control your position in terms of the risk and therefore in terms of the size. And you should also control your positions in terms of outside external opportunities that exist for the capital that is going to be dormant during this reaccumulation. So therefore, scaling out at the appropriate time, and we had 2 scalers out here, one, and then the second one, anticipating that the capital is just gonna be dead for some time. So look how long from this bar right here it took to for the price to get out, like right here. So this 1, 2, 3, 4, 5 months. So 5 months, it's ups and downs, but really there is no progress. So you have to think about those things if you're a campaign trader, and even if you're a swing trader, you have to understand this, as to why this happens, how it will happen, because you will need to reestablish your swing position somewhere here on the test of this mini shakeout, or somewhere here. And then obviously just adding throughout the whole, reaccumulation trading range. This was just one add-on. I think that there should have been one more right here You could have added here, but that was not intentional to do that. So at least one more entry right here would be great. Okay, well, Franz, what are your thoughts on this unfolding trade?
Well, I really like the way you're discussing or you're describing managing your position through a campaign, uh, because one of the things that we know is that after a trending move, you're going to have a change of behavior at some point, and you're going to go into a trading range. So you need to be aware of that. And this is a relatively kind of sedate change of behavior. One of the things that we're taught is that the amount of the initial change of behavior can kind of give us a clue about how long the trading range is going to last. But even in this case, 5 months is a long time to be locked up in a position when there are other opportunities out there. So scaling back, but not not totally going away from the position, so you still know what's going on with the stock, and you're still aware of the so you are kind of tuned into what's happening. Makes a huge amount of sense. I like the initial point of entry, but I do see kind of the characteristic of getting in in phase B on that
Again, yeah.
re-entry.
This this is uh, this is my biggest nemesis in the analysis. It's just unbelievable. It's almost like if with all of the entries, if I would just wait for one more reaction, that would be like all of the perfect entries. Um, but then again, everybody has their own kind of like things that they need to work on. So this is clearly on analytical side is one of my things. I wanted to come back to this change of behavior. So you have to look at this reaction. It doesn't have a lot of supply signature, but still it does, relative to, let's say, some of the supply that came before. It also has, the most meaningful reaction that we have had on the way up. So it is meaningful. It does show that the change has happened. Then also I wanted to comment that usually when you're in the campaign trade and you're scaling out, I wouldn't be scaling out a lot because you still want to have a sizable position in the stock that you believe is going to go higher. So therefore, my preference is just to scale out 10 to 20% of the position size, and then use these proceeds to find other opportunities while you're, in this trading range, kind of like stuck. You could definitely increase this number, but if you're gonna go, let's say, to like 30-50%, that's a sizable chunk of the position. And I don't think that a lot of us have the capacity to go back with this type of size,
Mhm.
at the other points of entry. And I think it's just also easier to get in back into the position at the spots where support is, while you scale out, because your mind is going to be thinking, well, on average, I scaled out maybe like at one half of this trading range, maybe like at 270, but I'm coming in at like 240, so I'm gaining somewhat in terms of not only the price that you're getting back in, but also in terms of the timing. So I wasn't in this position for like 3 months with that scaled out unit.
Mhm.
So it's useful. It's extremely useful to develop that type of thinking for long-term campaigns.
Very
All right.
useful discussion.
Absolutely. Okay, Franz, so final thoughts?
Um, it's still a campaign. I'm sure you've done a P&F count. We won't go into that, but let that be your guide.
Good advice. Well, thank you so much, guys. And, as usual, if you have any type of trades that you want us to discuss, let us know. Email us at wykoffassociates@gmail.com. And thank you for watching. Until next week.
Thanks, Ramon.